open it up for general Q&A as well. But basically we've got Jim Catanzaro, who is a partner shareholder at Chambliss, a local law firm here, and he has been really kind of leading the charge for them internally around understanding and digesting for and with their clients the COVID related legislation that's coming out, the CARES Act. We had a call with him, I guess 2 weeks ago now, right when the CARES Act had just come out, and he walked us through a lot of that. But then certainly a lot has, I guess, changed or developed would be the right word. A lot of understanding around that act, as well as just additional guidance coming out from the SBA. So wanted to circle back around with him and get him on the line to share with us any kind of updates he has. And then also have added to the mix this time around, we've got Kenny Dyer, who is with Pinnacle Financial Partners, longtime banker here in the banking sector in Chattanooga, and wanted to kind of have that expertise on the line as well, just to kind of give you guys some insight and some updates from the banking perspective of how this is all flowing. So again, two really just knowledgeable and great experts that we have here locally, long careers with lots of experience, that we just wanted you guys to be able to hear from them, their interpretations of how this thing is going, and ask them questions. So with that, I'm going to quit talking. And Jim, we'll start with you, Jim, just have you kind of give us your updates, and then Kenny, definitely want to hear your perspective too, and then Q&A. Sound good?
Okay.
Thanks, Abby. So I'm just going to try to pick up with some of the questions that were received at the end of our last Zoom presentation. As Abby mentioned, hard to believe, maybe 2 weeks ago. But since then, we've had some guidance published by the SBA that has answered some questions, some really critical questions. And so I want to go back and tie down a few things I think that were maybe not quite as clear back at that point, and then just go from there. One of the interesting things I think that we discussed at that time was, well, are independent contractors for an employer included as approved payroll costs for purposes of applying for your loan and then ultimately when you're seeking forgiveness? And at the time we didn't have an answer, but we do now. SBA has come out and said no, they are not. The expectation is that independent contractors, just like self-employed individuals, would apply for their own loan assistance. I'll mention here briefly too, there's been some confusion about what that means for members of limited liability companies or partnerships. But I think while there hasn't been anything definitive out of the SBA, our best thinking is that those folks would be treated as self-employed. They certainly are for tax purposes. So our expectation is that they would also be treated the same under the Paycheck Protection Program. So that was one important clarification I wanted to pass on. The second, and let me stop, Kenny, if you want to add anything at any time during my points, feel free to supplement.
Sure, and Jim, you're right, and we'll get into some of that, but the interpretations of the law, it differs from different people you talk to. Unfortunately, I will say, with all due respect to my accounting friends and CPA friends, et cetera, and lawyer friends, that, the bank has to make some of those determinations on its own in definitions, because again, at the end of the day, we're the ones that will be out the money if for some reason there's an issue. So we are having to do some more due diligence, and some of our interpretations may be different from what your CPA tells you or what your a lawyer tells you. And it's not that one's right and one's wrong. The problem is neither one of us have got definitive guidance.
Thank you. And that, I think, is a critical point probably for all of these terms and conditions, which is for all of you out there, working with your lender is obviously going to be critical. One kind of interesting development, and I think it highlights Kenny's point, is SBA came out and said, look, we are going to hold you, the borrower, to your certification. So it's not up to the bank, your lender, to go through this and verify that everything that you say here or certify is correct. We're going to hold you to that standard. So as you go through your application and you work with your banker, you're going to want to be very thorough about what it is you're presenting, and getting their input on how you're completing your application. Because as Kenny mentioned, we're working with a lot of unknowns, and so working together on those kind of issues, I think, is ultimately going to be pretty critical. But it's an important point you need to know from the perspective of SBA at this point. That's the guidance that they put out there. And Kenny, I don't know if you have a thought on that one too.
Yeah, I mean, I think they came out with guidance on Thursday night, right before we were supposed to go live, which caused some challenges, and they came out with some more guidance on Saturday night. The biggest two was the withholding issue, whether that's included in payroll cost or not, and the other was the $100,000 limitation that you could include the benefits on top of that. And those were the two big ones, I think, that occurred over the weekend.
Yeah, I think what you mean is the $100,000 applies to the cash part only, the wages, compensation, and so it isn't a cap such that you would total up what we would call compensation, meaning cash wages or salary plus the other benefits, and say no more than 100,000. It was actually just the wages and comp part of that.
Correct.
So that was another really important development. One other thing I'll mention for many of our organizations that are faith-based, we did get some very clear guidance from the SBA in the form of FAQs and some published affiliation rules addressing the exemption that applies for what are termed religious organizations. That would be churches or their integrated auxiliaries, which is a legal term meaning those that are affiliated. And it clarified, said whether they're performing secular social services or not doesn't disqualify them from applying for a loan as long as they meet the 500 employee test. And when we're going to apply that test, we'll exempt them from the affiliation rules. So practically speaking, if a religious organization is affiliated with a conference, if you will, or another larger parent church, then the SBA won't require that those employees of the conference or the other church, for example, be included as part of the affiliation process. So when you're determining whether you can apply for loan assistance, you're looking at your individual organization and not worrying about having to affiliate and count the number of employees with a conference or other organization. So that was, I think, another really important development. Kenny mentioned a moment ago, and I'll highlight it here, greater clarity too around payroll costs. When we spoke last, we were speculating to some degree about what does it mean, the fact that they have excluded the FICA and income tax withholding specifically from the definition of payroll costs during the covered period, the 8-week loan period. And what the SBA has come out and said in clarification is that we mean the employer paid portion of that. So when you're looking at whether it's the application or the forgiveness part of it, we're looking at gross wages paid to the employee, because what is withheld and paid to the IRS represents the employee portion of the FICA and the income tax. So that's included. So in other words, if someone's receiving a $50,000 per year salary, then we're going to count the $50,000 as the payroll cost. That was an incredible, I think an incredibly important clarification as well. And so those are the items, I think, from my perspective, that were really important. And I'll turn it over to Kenny to let him add his thoughts on perspective from the lending part, important developments as well.
Yeah, thank you, Jim. I think Jim made very good points, and I think a lot of people are concerned, employers. Is mine getting through? Is my application getting through? Where's my money? What's the process? We've had to work very closely with, and like Jim said, I would advise you to work with your banker and your accountant and your lawyer to make sure that you've got the information correct. Right now, it has been a challenge for banks. I mean, it's something that came out quick. We had to be prepared to take these applications and review them and fund them. And the banking industry has been overwhelmed. There's no doubt about it. We're making some very good progress, but, kind of our process is, we get the application in, we actually send our customers a calculator and information that's required. The customer will fill that out and send it in to us. We have a review process that reviews them. We actually have 2 reviews. One reviews internally, and then it goes to our SBA staff. And again, we are delegated underwriters, so we don't send it to the SBA. That once we get that we think everything's in place, all the documentation accurate, then we upload it to the SBA just to get a number, and then we will fund the loan. The challenges for banks have been somewhat, Jim mentioned, that calculator that I talked about, it's changed about 3 times because of the interpretations that came out. We were taking applications on Friday, and obviously we had to change some of the information on there, so we had to go back to customers and get some stuff redone. And I know that's been frustrating for the customers, but the process is moving along. We are funding loans. We're funding them every day. But it's taking longer. I know if you listen to the Treasury Secretary, you'll get your money on Friday. Well, nobody got their money on Friday. And I think you hear a lot of people say they're getting their money. A lot of times that they have their number, where the SBA number where the money's been reserved for you, but that doesn't mean you've got your money, because we have to prepare some documents. The SBA just came out with their documents 2 days ago, I believe, of what the documents need to look like. And so that's been a little bit challenging. I know for the individuals, we're taking more applications than we've ever taken, in our history. This is something that is new. I've been in the banking business since '78, and nobody's been through this. So if anybody says it's like I was asked questions, is this like '08, '09? No, this is totally different. The programs are great. It'll help a lot of small businesses, but the process that was sent out to us was so quick that it was just challenging for all banks to handle. A lot of the banks, like us, we've even gone now to an automated system to enter them in to try to speed the process up. But it is taking some time, and I know people are frustrated, but we are getting money out the door, and that's the important thing.
And if I can, I would add here to Kenny's points, which is, the CARES Act legislation basically came into being in about a 7-day period. And so the rollout of that, of course, while the concepts might be, and they are, I think they will prove to be very helpful. The implementation piece of that, of course, is always much more complicated than maybe expected. So the fact that the banks are wrestling with all of these issues, and then on top of it, as Kenny mentioned, multiple guidances coming from the government, in some cases changing interpretations. It's been a real challenge, and I'll contrast the Paycheck Protection Program with the SBA's handling of the economic injury disaster loans. My understanding is that with an EIDL, at least as of this morning, that those that have applied for an EIDL loan have had a much more difficult time working with SBA directly. And in fact, that I'm not aware of anyone which is promised under the CARES Act, that upon application, you're supposed to receive a $10,000 advance if you request one within 3 days. I'm not aware of anyone who's successfully obtained that. Maybe someone on this call can chat and tell us whether they've had that experience or not. But at least at this point, I'm not aware of anyone receiving that advance. So it shows you, obviously, our local SBA preferred lenders are tackling a lot and managing it under very tough circumstances as compared to, say, that EIDL program, which I think is many are still trying to figure out what's going on there. So at this point, those are my updates. Kenny, I don't know whether you have more to offer or whether we should go straight to the Q&A at this point.
Yeah, I don't think I do right now. I will tell you that there are some other programs that are coming out that can help the small business. I don't want to get too deep in them because, quite frankly, we haven't ever been able to analyze them through the Main Street Lending Program. There is another program that's coming out, but again, I don't want to get too much into that because we don't know all the details yet.
No, that's a great point. Of course, the Federal Reserve came out last week and made available $600 billion for the Main Street Lending Program, and it is a program that would include many of the quote-unquote small businesses that otherwise might receive paycheck protection loans. So you might actually be able to obtain both assistance under both programs. But as Kenny mentioned, there isn't a lot of detail around that yet. So Abby, well, I guess now might be a good time to throw it open to Q&A.
Yeah, I actually did that and realized I was muted. So thank you for that. People, feel free to, I think we'll just have people unmute themselves and ask questions of these guys if you have specifics or general things.
Hi, what sort of clarity, if any, can you give us as it relates to the forgiveness element of the PPP loan, and what kind of documentation do you guys anticipate and or know is going to be required? Just anything that you can share. That's kind of the big unknown past the application, and any preview would be greatly appreciated.
Jim, I'll let you take that from the legal issues. I'll be honest with you, there's still a lot of interpretations on the forgiveness part, and we're scared to say definitively what it will be and what we're going to require. I will tell you that a lot of customers have opened up separate accounts for this money they've gotten, and so they have a better way of tracking it, because that's going to be the important thing, is to be able to show that, you spent 75%, at least 75% of the money on employees, that you spent it on rent, utilities, and interest on mortgages, et cetera. So there, I would rather be safe than sorry and do it that way. And but as far as definitively the forgiveness, I think a lot of that is up in the air. Now, I can speak to some particulars as we know it now, but again, that may change also. Jim, you want to get into that? I'll be glad to if you and add on to that.
No, sure. I agree totally. I'll just mention that, just in terms of what we do know now, it looks like at least what SBA is, telling us, payroll tax filings to the IRS, 941s, state income, payroll and unemployment filings. And then, of course, to the extent that you're paying something like mortgage interest, and remember, mortgage is broadly defined here, so that can't include any debt obligation that's secured by personalty, say equipment, or real property, interest on those obligations. And obviously to verify those kind of expenditures, you're going to want to keep good records of checks cut if that's what you're doing, or if it's electronic, some sort of acknowledgement of the processing of your payment, so that you can demonstrate that those are costs incurred. And those are the obvious ones at this point that we know about. And as Kenny mentioned, hopefully we'll have some sort of guidance soon out of SBA that gives us some further detail about that. But that's what we have available, of course, and we have the catch-all out of the SBA basically saying any other appropriate documentation, whatever that means.
Right.
Hope that helps.
I have a question that came up on a call and I feel like this might be rumor, so I just wanted to hear if you guys had heard this or if you can squash this rumor or tell us it's true. On the $10,000 convertible piece, right? That somebody was saying on a call that you can apply for 10, but then if you're a very small organization, and let's say you only have 4 people on staff, that you're only going to get 4,000 of that 10 because they're really doling it out $1,000 per employee. Have you heard anything like that?
I'll answer that first. I have not.
I have not.
Okay, I hadn't either. I just heard it on a call and was like, and there were quite a few people on the call, and so I just wanted to know. Okay, thank you.
Going back to that forgiveness part, I think, and it's appropriate, and you need to know how to spend the money, et cetera. But, most people that we've given funds to, most clients, right now to get the money, pay your employees, and, quite frankly, they said, I'm going to worry about that. I'm going to keep up my records, but then I'm going to worry about that when the guidance gets clearer. And I think that's probably the way you need to look at it.
Yeah, I think that's a good thought. Ultimately, well, no one wants to carry debt. In terms of debt service, you're talking about, a 1% interest rate, deferred payments for the first 6 months, and a 2-year maturity. So it is pretty favorable. And Kenny, I suppose, depending on the borrower and their credit, they might be able to refinance that if they really needed to at the end of that 2-year period, I expect. Is that right?
Correct, but I don't know if they were, since these are unsecured, no guaranteed loans, then, I'm not sure, that's the way we keep our SBA guarantee. If we did it in the bank, it would probably be structured a little differently.
Right.
Yeah, so I think that's the that's a caveat I would throw in there. And you know, again, the forgiveness, and remember, you've got the 8 weeks to spend the money, and the banks have 60 days after that 8 weeks to determine the forgiveness. So, you know, it could be down the road before, and I think they probably gave us that 60 days because we don't know what the rules are going to be for sure.
Kenny, the stuff that I've read says that after you're approved, it takes what? I think that they've said you'll have the money within 10 days. Is that right?
Well, initially it was 5 days, and they realized the banks just couldn't execute that quickly, and they changed it to 10 days. Frankly, once we get, because we're a delegated underwriter, once we get that authorization from SBA, we've been funding. You know, we send you, as soon as we get that, we send you automated documents right then, and you can DocuSign those, e-sign those right back to us, and it gets funded in hours.
Okay. Wow. That's great.
So in our case, it's getting the number, but once we get that number, it gets funded very, very quickly.
That's great.
We had a number funded. For instance, our people worked all weekend. I was here on Easter Sunday doing some of these, and we had people got funded, you know, sending the documents on Sunday and got funded on Sunday.
Great. Okay, there's a couple questions in the chat I'm going to convey. Does the EIDL take into account an organization's reserves, such as restricted funds from a capital campaign or endowment, to determine if they qualify?
Unfortunately, I do not know the answer to that question, but I don't believe so. Kenny?
No, I can't tell you definitively, but I don't believe that that makes it, it's not applicable.
Okay, great. And then this is another good question. When does the 8 weeks start? I feel like there's been some question of it. Is it when you get approved, when you get the funds? Is it retroactive?
It's when you get your money.
Okay.
In our case, most of the time with that's the same date of the note. You sign and you get your money that day, and that's when your 8 weeks starts. That has been a challenge for a lot of people. You know, there was talk initially of people want to get approved and get their number, but I don't want to get my number. I don't want to get my money now. I don't want the 8 weeks to start because, you know, I'm shut down. I'm generating no revenue. And so I may not want my money right now. And then that's one of the interpretations came out, said you had to have it, that the banks had to get it to you, and that 8 weeks starts then. And that's put a lot of businesses in a little bit of a quandary, in that if I don't think I'm going to be, because again, we go back to the forgiveness, that June 30th date of the number of employees and how you spent that money is an important time, or during the 8 weeks. But if you were to get your money today and then let's say you got your money today, well, that takes you till June the 14th. Well, if you're still not opening, generating any revenue, you're going to have to pay those, if you want it forgiven, that you're going to have to pay those employees from the 14th through the 30th out of your pocket. So that's been a little bit of a challenge and a question, and I've heard that's been discussed in Washington a good bit, because obviously people are concerned about this money running out. So, I want to wait to get my money, but I'm afraid it might run out. So that's the dilemma that faces the customer.
I think an interesting point in all of this, too, is we've talked about, we're waiting on more guidance for the forgiveness part of this. And one of the interesting issues is going to be this savings that's allowed if you reduce your staff or you reduce pay for those that are making $100,000 or less in salary or wages. But if you cure that, let's say that that's done, under the terms of the act, they give you this 30-day grace period following the enactment of CARES, which occurred on March 27th. So that's through April 26th. Let's say that you flex down your staff, you reduce their hours. the idea is from some that you can do that and then avoid any reduction in forgiveness if you simply by June 30, let's just say you did this all on June 29, restored your head count and your pay. But I think what people miss with that, which is, well, there might not be a reduction applicable, and we'll have to see how SBA really looks at how that works. But you're only going to get forgiveness if 75% of the monies that you use, as Kenny just pointed out, are used for payroll costs directly on essentially the wages and salary and the other benefits to the employees. So if you were standing everybody down and reducing those hours and therefore the payments, and you might have been saving in terms of expense, but you weren't using those loan funds then to pay for those costs, well, then you're not going to get forgiveness at the end of the period, regardless of whether there's a savings or not.
Yep, that's true. And I think, Jim, big thing to point out is the forgiveness is not all or nothing. It can be a percentage could be forgiven depending on how much you spent.
Exactly. Right.
And I think a lot of people miss that point.
I agree. I think a lot of folks are thinking, well, it's just 100% reduction. And no, you're actually going to get credit for the sum of the costs that are paid with the loan funds, up to the maximum, amount of the loan amount. So there's going to be a calculation done, and you may receive 100%, but you may receive something less than that, depending on your use of the funds.
Kenny, do you have any, I don't know, I guess just like specific, do this, don't do that in terms of getting prepared to work with you guys?
Yeah, it's very, very important that your documentation be correct, because if it's not, it goes to our reviewers, they kick it out, and, it kind of goes back to the back of the chain and to get picked up again. The things I think that Jim talked about, that our calculators are very important, that we send out with everybody to figure their amount. We have to have one of those calculators to verify the amount. The 941s are important. The information, on your benefits. We've had a lot of people that have left out, they may pay Blue Cross once a quarter, and, they left out that check that we need a copy of that check that goes to Blue Cross, something like that, to get as much of your documentation. And we give you a pretty good checklist, but to make sure that checklist is correct. And, quite frankly, some of these files we've been getting from the bigger companies, they're 800 pages long, because it lists all the employees. Because if again, you've got another calculation that you've got to do. It's in our calculator about the employees that are over 100, how you subtract those out, and you got to list those. And but it's very important to get that documentation in correctly.
And do you guys have any more guidance on availability of funds and this whole first come first serve? What's the sense of urgency, I guess? I mean,
well, I think you noticed that
make payroll.
I think there's been, don't have my numbers exactly in front of me, but a good part of this, the SBA has made commitments on. We're hoping that Congress will pass an additional amount of money. They've tried and gone back and forth early this week. I understand that there's going to be another vote on Thursday. But, that's kind of a wild card. The first come, first serve, we've tried our best to do that, but I'll be honest, it goes in a queue and different people pick it up depending on the size of the loan. The more experienced people pick up the bigger ones. And, it may not be, the same order as others came in. You know, that's kind of what's happening, and why people ask, hey, I heard XYZ company's already got their money, and I turned mine in on Friday morning, and, you know, I don't have my money. And a lot of that's because we've had to redo the applications as well. So in other words, I can't really give you a definitive answer on that.
No, that's interesting, though, to understand the internal operations of the bank. Kenny,
Looks like
go ahead.
I'm sorry, I was going to say, it looks like there are a couple more chat questions.
Yes, I was just going to say, can the funds be used to back pay employees, and what would be the date when back pay could begin?
I would not recommend doing that.
No.
Yeah, and I'll just say real quickly that the Act says pretty clearly the 8-week period begins, as Kenny pointed out, when you receive your loan funds, you go 8 weeks forward, and you're using the loan funds to pay the payroll costs incurred during that time period.
That's great.
Yeah, I agree with Jim. Yeah.
Okay. And then I guess I would just say, Sherry, who put something in the chat, if you want to drop your email in, we can make sure to get that to Kenny, but it looks like she banks with Pinnacle and isn't sure about the calculator that you mentioned. The
calculator has changed. And Tara, she can talk to her banker if she's got a question and make sure she's got the most recent calculator, because it has changed because of the interpretations we've got. But calculator is just where you put in your salaries, you put in your benefits. You would subtract out those that are over 100,000, that income over 100,000, and it calculates your eligible amounts.
So is it like an Excel spreadsheet that you guys use?
Yes.
Okay.
And we send that to everybody. We sent ours out to customers actually Thursday night. And now, granted, we had to change a lot of it because of interpretations, but all of our bankers are knowledgeable. I'm not going to say we're all experts, but we're all very knowledgeable, and we've talked a lot about the program. So, I would encourage you to use your banker as your, effective advisor to kind of help you through that and make sure you've got the right, you've got the right calculator.
Great. Thank you.
We have actually, we'll go back to it for us, we've actually gone in and changed some of those ourselves, like the withholding, and didn't make the customer necessarily send us another one, to try to speed the process up.
Gotcha. There's another question in here about, are there the two different, the PPP and the EIDL, are the rules the same for them? I think that the other kind of related question there is, that I've heard come up, is should people apply for, is there any strategy involved in what you apply for and what you don't?
Jim, I'll tell you, from my, you can do that, but you got to be careful about what you say the funds are being used for. You can't say that you're using the funds for payroll on both programs. That will be a problem. And remember, the other program goes straight to the SBA. It could be, again, it was originally for, when you had tornadoes, when you had hurricanes and repairing property and things like that. And again, it's a collateralized loan, and it has guarantees, et cetera, and it has different terms. But you kind of got to be careful what you say you're using that money for. You can get both.
Yeah, I agree with that. You can get both, and as Kenny pointed out, you can't, though, use it for duplicate payroll costs. Let's just say you can't use it for the same purpose, which would be to cover payroll costs and other approved costs that you would for a paycheck protection. It is a true loan. It is not forgiven. It has a little bit different features, as Kenny mentioned. You would have, I think the interest rate for nonprofits, I believe, is 2.75%. It's I think a greater maturity. I don't recall which. I think it's, you can get as much as 30 years, although I'm assuming it would depend on the amount and type of loan you're getting. And then finally, of course, under this one, as Kenny pointed out, you're providing guarantees and collateral if it's in excess of $200,000.
Okay, well, it looks like we have, I believe we have gotten through all of the chat questions. If anybody else has another question, feel free to unmute and chime in. But otherwise, I think if anybody has, if any of you guys have either any kind of closing thoughts or final words of wisdom, feel free.
Yeah.
As if you
bank
haven't
side,
shared
I
enough
guess-
already.
Yeah, well, for the bank side, I'd say, still, be patient, talk to your banker, and stay in touch with them. We're sending out automated notices telling you the status and where it is, and in the queue. And, again, I go back to kind of what Jim said initially. You really need to stay in touch with your banker, accountant, and lawyer. We've been working together on a great many of these. And that's the people we've actually been dealing with as much as the client in a lot of cases.
Yeah, I agree. I think those are great closing comments. That's ultimately where I think you need to have your communication, and you just need to be very forthcoming, have good documentation, and help your lender make the process go as smoothly as possible. So as much as you can prepare in advance, use their calculator, come in with the right documentation, that's going to help you get through the process that much quicker.
One final clarifying question. Is it 8 weeks or 60 days?
It's the covered period for the loan is 8 weeks.
Okay.
Mm-hmm.
That's what I thought. Okay. Great. Well, gentlemen, thank you for your time. I know you're both incredibly busy right now, so we really appreciate you sharing your expertise with the group.
Glad to
Thank
do
you
it.
very much. If anybody has questions, they can always feel free to call.
Okay.
Whether
Yeah.
they're customers or not, we can render our opinion.
Okay. Wonderful. Well, again, thank you. Ada and I will be here for another couple minutes as we close out. But otherwise, I think that we are dismissed. Thank you so much for everyone's time.
Thank you, Venture Forward, for putting this together. Appreciate it.
Yes, thank you.